The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. Welcome to the ACPS 1-hour webinar. Today we have Bob McKenzie speaking on innocent spouse.
Hi, this is Bob McKenzie. Welcome to the program. We'll be talking about innocent spouse, and this is a good area to add to your practice. And before I go into the details of innocent spouse and getting this relief, I'd like to say the best way to promote this is to let the divorce lawyers in your hometown know you do it, because it's a common fight in many divorces about who's going to pay the taxes. You can do that either by getting a list of divorce lawyers and writing letters saying you perform this service, or seeking out one of the local organizations of divorce lawyers and asking to present a program to them. But by word of mouth, you can get this, and it's been very good to me. It continues to get me business day in and day out from a referral network among divorce lawyers. So don't pass up this opportunity. It's a way to promote your practice. It's something that's needed, and you can do a good job at it. So with that, let's go on to our program today. At the conclusion of this course, you'll be able to understand the situations where you can use 60-15, which is the relief provision we'll spend most of the day on, for innocent spouse relief, separation of liability, equitable relief. There are 3 different types, and we'll go through those. We'll describe the procedures and forms to apply for the relief. We'll go through the options available to your client, so that hopefully when you get through, you'll be in a good shape to go out and try to get relief for your clients. Now, there are 5 types of relief I'll be covering today. The first is not truly innocent spouse, it's injured spouse. And that's the fight about who gets the refund. And the classic situation is that she married him, she didn't know he had outstanding taxes or outstanding child support or unpaid student loans. They file a joint return. The IRS takes the entire refund, while the injured spouse is entitled to file an 8379, which says, I want my share of the refund. In the states west of the Mississippi, which have community property, it's pretty simple. She would get 1/2 the refund. The remainder would go to pay her new spouse's obligations for child support or student loans or prior taxes. In a separate property state, which is the majority of the states, about 39 of them have separate property, the allocation is a little more complex. You use, in both cases, a Form 8379, and the refund will be proportional to the amount that she paid in and the amount of income she had, and the amount he paid in and the amount of income he had. And then that proportion creates the refund available for the injured spouse. I'll go into this in a little more detail. So these are the summaries of what we're going to cover right now. The second is innocent spouse relief, which is 60-15B. And if you were making notes on this, you would say still married is generally the provision. And we'll go through, as we go through this, the test to get relief under 60-15B. This next part of our program will be on separation of liability, and the comment there would be no longer married or separated. So no longer married or separated. And what we'll get into is it's easier to get innocent spouse if you're not married than if you're still married. And we'll go through the easier test under 60-15C as opposed to the test under, I'm sorry, I hit a button and it just disappeared. So we're going to have to get that off. So I don't know. Can you see my slides or not, folks? Because I'm not able to see them.
No, we cannot see him right now.
How do I get this off? I had a button to highlight something and it just trying to.
Do you want to try going back one slide, then going forward again?
Okay, let me see if I can do anything. I can't do anything right now. Oh boy, sorry about this, folks. I hit the button to draw. Okay, we're fine. Sorry about that. We're back running. Okay, the next issue is equitable relief, which is if you can't get the first two, you can claim it's just not fair, and you can get relief on this one. So we're going through that. And then the last one is only for community property states. That's Code Section 66, and that would be generally in a community property state. She must report half of his income and half of hers, and he must report half of her income and half of his. Now, there are exceptions where if she has the same types of facts as in the traditional innocent spouse, she's allowed to file a married filing separate return, only reporting her income, or he has the right to file a married filing separate return, only reporting his income. So those are the things we're going to cover today. Let's move to the next slide. Now this again is to avoid when only one spouse has an obligation for prior taxes, student loans, or child support. And the issue becomes that you can do this when you file a return. So if they're filing a joint return and you know that one of the spouses didn't pay his student loan and that government has set up an offset, you prepare the 1040 and add the 8379. Same thing with taxes owed by one party, same thing with child support owned by one party. If you don't know and the client loses their refund in full when they file a joint return, instead of filing a separate return to avoid that, you file the 8379, ask for the taxpayer's share of his or her refund, and the remainder will go for the client who owes the money, but the person who was not liable for the taxes, student loan, or child support will get his or her share. And again, it depends on whether you're in a community property state where it's 50-50 or a separate property state where it's proportional to the amount of income of each, the amount of amount paid in by each, either by withholding or estimated tax payments. So let's go to the first traditional innocent spouse relief, though, and that's 6015B. And this is, again, the one that's still married. And the first thing is there has to be a joint return. I've actually seen people who showed up in my office who tried to claim innocent spouse saying, I filed a separate return, but my wife promised she would pay it. That's not innocent spouse. We're talking about a situation where a joint return was filed, so forget anything about innocent spouse on employment taxes or married filing separate returns. There must be an understatement of tax that's erroneous, which means it's only for audits. It does not apply if the couple files a joint return with a balance due on it. It only applies in the case of audits, and the other party that you're saying is the liable spouse must have made an erroneous taken an erroneous tax position on that joint return. And this is the tough test, and it's the toughest test under still married, which is 6015B. The proponent of innocent spouse must prove that he or she had no knowledge of the omission or no reason to know. And the one that trips up my clients many times is the reason to know. And we'll go through an example of that in a bit. And next, you would have to establish it's unfair to make the innocent spouse party pay a liability incurred or caused by the liable spouse. To do this election, it must be either when there's an audit going on, or it can go on a lot later. Somebody can show up in your office where there was a joint audit and innocent spouse was never raised, and you can begin and claim innocent spouse anytime within 2 years after the IRS issues a collection due process notice or offsets a refund, or the IRS files a suit to collect the tax. So we could have a situation where the couple were audited 5 years ago, the liability remains unpaid, and they had not gotten a CDP notice. Then you could come in and argue, I'm entitled to contest this liability. Now the problem is normally there is a CDP notice, and that starts the 2 years to claim for innocent spouse. Now let's go through an example and discuss how the third issue becomes a problem. Let's take Mary and Joe. Joe runs in a restaurant. Mary's a stay-at-home mom. He claims that he earns $35,000 a year net from the restaurant, but they live in a $400,000 house with a $300,000 mortgage. Each of them drives a luxury car. She drives a Lexus. He drives a Mercedes. They go on nice vacations. And why? Because they really manage their money well. Now, she knows nothing about what he's doing in the business. She doesn't pay any attention about what's coming into the household. She just spends money, uses her charge cards, and never worries about it, and there always seems to be enough money. Well, she may not have any specific knowledge that the husband's doing a skim from the business, but the problem she has is reason to know. And the question that the IRS will ask is, you didn't notice that you had a $300,000 mortgage? You didn't notice you were driving beautiful cars? You didn't notice that you were going on nice vacations? You had reason to know because you signed a return showing $35,000. So that's the trap and the defense that the IRS will make when I claim innocent spouse for a still married person. And the burden to prove this is on the person claiming to be an innocent spouse. So if I'm representing a wife who is still married, she comes forward, she says, I'm an innocent spouse by filing a proper application for innocent spouse. We do a narrative and we answer the questions. And if she's married to that restaurateur, the next thing that we're going to face is, why don't you have reason to know that the tax return you signed was not accurate? So that's a problem, and so we're going to get into that in a bit more. Knowledge. What does it mean? Establish that he or she did not know or have reason to know. What if she does not know or have reason to know the extent of the understatement? That may or may not be depending on the nature of the she may have reason to know one thing he's doing wrong but not the other. There's a case called Cheshire where I participated in an amicus brief. A group of attorneys from the American Bar Association participated in, including Karen Hawkins, who's now director of the Office of Professional Responsibility. And in the Cheshire case, Mr. Cheshire took money out of his IRA during the marriage and used it to pay off the mortgage. When his wife questioned him about it, he said, don't worry, it's not taxable if you use money from your IRA to pay your mortgage. Now, that was a lie. Ms. Cheshire believed him, though, and signed a joint return that did not report the IRA. Of course, the bank had reported that distribution. The IRS audited the couple and asserted liability. Ms. Cheshire came forward and said, I did not know or have reason to know. I'm not a tax expert. I knew he took the money out of the IRA, but I didn't have reason to know it was taxable. And the tax court ruled against Ms. Cheshire, and then those of us in the American Bar Association who felt that was rather unfair prepared a brief and filed it with the Fifth Circuit Court of Appeals, saying that being lied to took away this defense of reason to know, that just because she knew of the event did not mean she knew it had to be on a tax return. And the Fifth Circuit ruled that she had reason to know that even though, and it was her duty to verify whether the husband's statements were right, that she did have reason to know that the money had been taken out of the IRA, and that that was sufficient to meet the reason to know standard. So it's a tough standard when you go to that effect. Next, the one where you're no longer married is a lot easier. So this, again, is a joint return to you either are no longer married or legally separated with a separation agreement, or you have not been members of the same household for 12 months. And now the burden of that, and it's also only for audits, but the burden is now on the IRS to prove actual knowledge. Next element is the election, again, must be within 2 years, just like the other, of the issuance of collection due process, offset of the proponent's refund, or suits by the IRS. And lastly, there can't be any fraudulent conveyances. So let's go back to this actual knowledge. Remember our restaurateur who was declaring $35,000 a year, but a stay-at-home wife who cared for the children, was living in a nice house, driving nice cars, and going on nice vacations. The IRS has to prove she actually had to know of her husband's understatement in order to be held liable. And the mere fact that she should have known is not sufficient. So there's actually a great case out of Oregon where the couple both worked for a village in Oregon. He was a cop. She was one of the people in the bookkeeping department of the village. The judge described her as a compulsive shopper. She was always buying things, and the reason she could afford to buy all these things was that she was embezzling from the village. She was eventually caught. She was convicted and imprisoned as a result of her embezzlement. And the IRS, learning of the embezzlement, of course, said that was taxable income to the family, audited and asserted a joint liability on the unreported embezzlement income. Now, she had gone off to prison. The husband came in and asserted that he was an innocent spouse, and he asserted under B and C. And he was successful, even though he was a cop, because the court considered it under 6015C and said they're not members of the same household because she's been a guest of the state of Oregon in prison for more than 12 months. Therefore, he qualifies under 6015C. The IRS said, well, he knew. He was a cop. Who wouldn't notice all that buying that the wife did? And the court essentially said that's reason to know, which would preclude under 6015B, but it doesn't prove that he actually knew. So a cop, you would think, would have a higher standard than some other people since he is involved in investigating crimes, but he was granted innocent spouse under injured spouse, the election of separated liability, I should say, under 6015C, because he was not in the same household as his spouse over the last 12 months. Now, the last one, no fraudulent conveyance, that is an issue that the IRS is worried about, in that people might get together and decide, let's put everything in the one spouse's name in the divorce, and then she'll claim innocent spouse, and he'll claim, yes, I'm liable. But when the IRS comes to collect, there won't be anything to collect. So the fear would be, and the reason they added this into election to separate liabilities is the fear that people would conspire to put everything in one spouse's name and then claim that she or he was not liable because of the election to separate. So one effect of this difference between 6015B and 6015C is to create an incentive to divorce. And the following situation occurred a year or so ago that I became involved in. A defense attorney on the East Coast was defending a Boston lawyer who had understated his income substantially to the extent that he was facing over $1 million in liability. It was a joint return. His wife had signed it. She was an instructor at a local college. He was a practicing lawyer, obviously pretty successful. They lived very nicely. They had a home worth over $1 million. They had a $90,000 boat on the Boston Harbor. They both drove luxury cars. The audit was going badly. They were going to assert a fraud penalty and this large liability. The attorney recognized he would have a potential conflict of interest to represent the wife in this case. So she was referred to me, and in a series of joint meetings, I found the facts. The husband had, in fact, underreported his income. She was unaware of it at the time she signed the returns. But the danger would be if they stayed married, if the IRS would have the reason to know standard. And we have a smart woman, smart enough to be a college instructor. She lived a very nice lifestyle. Her income was relatively modest, about $90,000 a year. And the question again is, where did you think all these nice things came from? This tooth fairy lady. I discussed that. I pointed out if there was a true divorce, then in fact she would have a better chance of prevailing on the assertion of liability. At some point, she chose to file for divorce from the husband. He was of the attitude of, oh, this is all just a game to beat the IRS, so he wasn't particularly concerned until she sought a court order through her divorce lawyer to evict him from the house after that was awarded her by the judge. Now, I did learn a new vocabulary when the attorney called to inform me how unhappy he was with the advice the wife was given. But now she is currently before the tax court asserting that she's entitled to separation of liability because she is no longer married. The IRS cannot prove actual knowledge of her husband's activity. All of the unreported income were the result of his practice. The election on IRS form was made during the audit. In this case, a 90-day letter was issued. We filed a petition in tax court and claimed it right now before assessment even took place. And there's been no fraudulent conveyances. So bottom line, she is asserting in a separation of liability, not innocent spouse under 6015C is her, and the IRS will have the burden of proving that she knew, and I don't believe they'll be able to meet that burden. The IRS must show the electing spouse knew of the understatement by the other spouse. Again, 6015C only applies to audits. The knowledge requirement is lower than for spouses who remain together. The electing spouse has the burden to show that she did not know or reason to know. So that's the problem. In one case, the burden is on the taxpayer who's still living with her spouse. In the other case, the burden is on the IRS, and it's a much higher standard on the IRS. They have to prove actual knowledge on her part, not reason to know. And the question is, how much did she know and understand? Knowledge of the source of the erroneous item is sufficient to establish. That's the Cheshire case I discussed. let's go now to equitable relief. Equitable relief is available if you filed a joint return for which he or she seeks relief. Once again, a joint return. No fraudulent conveyances, once more to avoid the danger that people would transfer everything to one spouse and then claim the other was liable. And you do not qualify for B or C. So if you were still married and living together and you applied under B, you could come back and say, well, at least consider this fact. It's really unfair. I'm a college professor. I didn't know much about my husband's situation. Maybe I had reason to know, but it's just not fair to make me liable. Look at equitable factors on whether I'd be liable. And it would be inequitable to make her pay this liability in the case of, yes, you had reason to know. And the more important thing, this relief is available for both understatements or underpayments. So the couple filed joint returns, and then on the balance, on the bottom line, it showed a liability of $100,000, and both signed. Now, the $100,000 was attributable to the husband's self-employed income in my hypothetical. The wife had a job with withholding. So the understatements were, underpayments were attributable to the spouse that you're asserting should have to pay, and the person requesting equitable relief, the payment was not caused by her income. In that particular case, that is allowed. So you can use this in a collection case. In fact, when you do a collection due process appeal, one of the boxes you can check on the 12153 is essentially saying it's my spouse's fault, not mine, which is in fact a request for innocent spouse under equitable relief. Now, the IRS originally asserted that you could not bring this as a standalone action, which meant that you couldn't go to court if you lost a request under an underpayment, because to get to court, you would have to bring an action only on understatements, and you'd file a tax court petition. And if you came in and said, I'm entitled to B or C, and then you lost that, the courts had held you could assert equitable relief. But on just a collection matter, you could not. Now, a case arose in the mid-2000s where, once again, Karen Hawkins, who's director of OPR, asserted that a taxpayer could assert it standalone. And the tax court held, yes, you could do standalone. And then later, the Ninth Circuit ruled against her, and then later law was passed allowing a standalone action. But now the next question arose, remember this 2-year requirement under B and C. Well, the proponents started to argue in 2009 that, look, there's no requirement for 2 years in the 6015F. It only specifically applies in B and C relief. And the tax court had ruled in favor of several taxpayers, but universally, the appeals courts, including my circuit, the 7th Circuit, and the 9th Circuit, said no, that for F relief, this 2 years from the beginning of collection also applied. And so the IRS was winning all the cases on appeal. The taxpayers then sought help from their congressman. The IRS received notice that there were going to be hearings on this issue. In July of 2011, they issued an announcement that now for F relief, they will not require 2 years. So now we have situation. Let's say your client could have gotten 6015C relief, but she waited too long after the collection due process notice. You can still now file a request for innocent spouse under equitable relief, saying, I would have gotten it but for the 2 years. It's just not fair to make me be liable for this just because I blew the deadline under 6015C or 6015B. I am entitled to equitable relief. So it gives the taxpayer a lot more chance to raise innocent spouse either on an underpayment or understatement, because the mere fact the IRS took their refund or sent a collection due process notice does not prevent raising 6015F relief. So if the requesting spouse is applying for relief from liability or portion of liability, request relief must be made before the expiration of the statute of limitations, is the announcement that came out in 2013-34. And so generally that period expires 10 years after the assessment is taxed, but may be extended by provision in the Internal Revenue Code. So the bottom line is 6015F, if the liability is still owed, you got 10 years to come in and ask for it, whereas under 6015B and 6015C, it's within 2 years of when the IRS starts enforced collection, either the collection due process notice or taking your refund. Claims for credit or refund must be made before the expiration of the refund statutes, which means within 3 years of the time the tax return was filed, or 2 years after the tax was paid, whichever is later. So that's the same as any other refund claim. So if the matter is still open and unpaid, the taxpayer has 10 years to assert 6015F. If it's all been paid and they're asking for a refund, then these 3-year and 2-year provisions come into effect. Now, the IRS has issued guidance on when they will give equitable relief. One, they look at marital status even under F. So if you're no longer married, when you're seeking F relief, you have a better chance of winning than if you're still married or no longer living together. It also gives you a better chance. Economic hardship, if one person who's seeking relief would suffer severe hardship. Let's take this. The one party has some savings and the liability is large enough, all of her savings would be taken. That can be raised as one of the issues to say, please give me relief from either an understatement or an underpayment under F. Knowledge or reason to know. If they're still married and you're asking for equitable relief, let's say you did it too late, more than 2 years, that standard would still be there. Non-requesting spouse legal obligation. If the non-requesting spouse has a court order saying that she should pay it in the divorce decree, and then he comes in and says, I am entitled to equitable relief, the courts in an equitable relief case will look at the fact that the legal obligation is on the wife in the hypothetical I just posed. Who got the benefit from the original events? So if the major benefit fell on the other party, you can raise that. If they both benefited equally, then that's going to be a harmful factor. Compliance with tax laws. If she's seeking equitable relief, she better be complying with laws now. I mean, if we're looking at I didn't pay my taxes when I was living with my husband, but I paid them all perfectly since, that's a wonderful argument. The requesting spouse did not knowingly participate in filing a fraudulent joint return. Now again, that takes away some of you did not know or have reason to know if you knowingly participated, but it doesn't totally preclude it if you can raise the other issues. The income tax liability from which the requesting spouse seeks relief is attributable to the non-requesting spouse. That's certainly important. So in the case, if I were seeking equitable relief for the lawyer's wife, it's certainly all of the underpayment or understatement was the result of the other party. In the case of an underpayment, if one was paying her withholding taxes and the other was subject to paying estimated taxes and had not paid them, that's going to be to your benefit in seeking relief. Streamlined relief is available now under the IRS procedures. If they're no longer married, that you get a quicker consideration of 6015F. And you would suffer an economic hardship, and 6015A cases did not know or have reason to know. In every event, if you're arguing that, you have and you can prove that, you have a much better chance to get relief. If the non-requesting spouse abused the requesting spouse, I had one where my client married at age 16 to her husband, who became a tradesman but kept getting fired because he was a drunk and ended up being a handyman. He regularly beat his wife. They had 3 children in rapid succession. And she, though, went back to and got her GED and then went back to college and actually became a nurse. And as soon as she became a nurse and could support herself and her children, she divorced the drunk and moved on with her life. But she had signed joint returns with the drunk during the term of the marriage, and they had balances due because he was a handyman. No estimated tax payments had been made. We came in, we brought in proof of the beatings and that there had been multiple calls to the police, to the household. She'd gotten a protective order at one time. We had affidavits from her family members that she was subject to physical and mental abuse, and relief was given. And then for 66, Code Section 66, did not know or have reason to know of an item of community income. If they're living apart and he or she doesn't know what the other party's earning, you can seek this streamlined relief under the 6015F provision. Things against you attributable to the requesting spouse. So if it was my business that wasn't paying estimated taxes and my spouse had withholding, even though my spouse said, "Don't worry, I'll pay it, honey," that probably will not give me a good relief. I can try using the other factors, but this is going to be a strike against me, another strike against me. If I knew or have reason to know when I'm seeking 6015F, that's a strike against me. Significant benefit. That if I were going for innocent relief from the person who was married to a lawyer, that could be a strike against me. Lack of economic hardship. If my client has a large bank account and the ability to write a check to pay the full tax liability, that will be used against me. Again, this does not mean absolutely no. These are just factors against you. Non-compliance with federal income tax laws. I'm seeking equitable relief, and I haven't been taking care of my own tax situation for a couple years after the year I'm trying to get relief on. If I'm not complying with the law, they're going to use that against me too. Requesting spouse legal obligation. If the court has ordered me to pay it, and then I'm coming in saying I should get equitable relief, that's going to be used against me certainly. So the Ewing case was the one where the court said they couldn't have standalone jurisdiction. The tax court followed that in Billings, but in 2006, after Ms. Hawkins had lost in the Ninth Circuit with the Ewing case, claiming that there was standalone jurisdiction, the 2006 law, sponsored by Dianne Feinstein, the senator from California, provided that you could have standalone jurisdiction under 6015F. So, knowledge or reason to know, lack of economic hardship, noncompliance with federal laws, requesting a spouse's obligation, all those are against you. Now, in your materials, if you look on pages 18, 19, and 20, you'll find questionnaires that will go through these questions with you on innocent spouse, which is figure A on page 18, On page 19, you'll find, let's make sure if it's 19, I'm sorry, I'll get to the right pages here. I think I'm giving you the wrong pages. It is actually, yes, and it begins on page 19, not 18, so the numbers on the slides do not correspond. So this page 19 is the prior slide, which is innocent spouse. Page 20 of your text is the questionnaire and chart for separation of liability, and the slide on page 21 of your materials is for equitable relief. So you have a flow chart to go through to make your decisions. With that, I'm going to stop for a minute. Julie, do we have questions?
Yes, we do.
Okay.
Okay, a new client completed the 8379 incorrectly and all refund went to the spouse's child support. Can the 8379 be amended?
Yes, you can come in and amend it and file it with a 1040X, attached to a 1040X.
Okay, and for 60, 15, and 66 relief, do the corresponding tax returns need to be audited to apply for these two reliefs?
Well, in the case of 6015, which was it, 6015F or not?
Yes.
6015F, you can apply for it based on a liability, on a joint return, where it was filed and a balance was due. That's the interesting thing about F. There doesn't have to be an audit. For 6015B and C, there must be an audit. On Code Section 66, many times you might be filing a tax return without the other spouse's income, a separate married filing separate return without that spouse's income, and you would attach a request for innocent spouse on that return in order to avoid the ramifications of the requirement to report half the other spouse's income, and that would be, I don't know or have reason to know what her income was, and because we're separated, we're living in different places, and we don't talk to one another, don't make me pay on her income and mine, half and half. And so that would be an appropriate time to do that. Or if the IRS came in and audited your separate return and said you should have filed reporting half of her income and half of your income, you can also raise that that's Code Section 66. Let's go through the procedure. For a innocent spouse claim, we have the exhibits back in your materials beginning on page 38. The form begins on page 40, which is the innocent spouse request for innocent spouse relief. And if you look at it, you have to have a joint return, and pretty much the elements we've discussed are all on that form. I would suggest that somebody knowledgeable of the innocent spouse procedure, 6015 B, C, and F, do this form so that the client doesn't say something stupid on the form. You can't mislead or be untruthful on the form, but you certainly, knowing the requirements, you're in a lot better shape. Okay, next one, question.
Okay, is it ever advisable to file separately if the reliefs are possibly needed?
Well, there's a lot of times you should not ever file a joint return. In separate property states, let's take this one. Husband had a business, didn't pay any estimated taxes, made some money, and there's not enough money to pay the taxes. And the wife had withholding and has sufficient to pay her taxes. You could have them file a joint return, making them both liable, but it would mean that the entire house is at risk. All the joint assets would be at risk in full, whereas if the car and the house are titled jointly and only one of the people owe taxes, it's a lot more difficult for the IRS to take enforcement action. Both spouses will owe a little more tax, but if they're not going to be able to pay it, it would be good to have one party not liable. In fact, I had one client who sued her accountant in a separate property state because the accountant failed to tell her that she could have filed married filing separately when she wouldn't have owed money. She signed a return owing millions of dollars, and the IRS eventually forced sale of her house, and she sued the accountant to recover her 50% share after she failed to get equitable relief. So the best option is file married filing separately in separate states, but if the damage has already been done, then you're going to try for innocent spouse relief. Next question.
Okay, the IRS has taken the position that a spouse who claims they never signed the joint return will nevertheless be assumed to have agreed to the joint return. Apparently
Yes.
they quote IRM, although I was able to get relief in my matter, is the IRM effective in this, or does it still exist in the IRM?
Well, it does exist in the IRM, but you can get relief, and so that's another element when you say I didn't sign it, but the IRS is saying, but you would have if it was presented to you. It gives you another reason to say I didn't know or have reason to know. I never even saw the return. I didn't know how much he declared. Tell me that isn't going to be a little easier to get did not know or have reason to know. Next question.
Okay, if there was not a joint return filed, but income was reported to the wife due to the ex-husband's fraud, is there any relief available other than OIC doubt as to liability?
Well, why would it be reported to the wife? In a community property state, it could be, but yes, you could do in a community property state if the husband committed the fraud and they were trying to attribute half of the money to her, then you could do a code section 66 using the form 8857. If it's a separate property state and he stole the money and they didn't file a joint return, I don't know how they could assert liability against her.
Okay, we're set for questions right now.
Okay. When do we end? What time do we end, Julian? I'll keep going.
We end at 3 o'clock.
Okay, so let's continue. The forms are in your book again, beginning on page 40. They're all submitted to the Cincinnati Service Center, no matter where you live in the country. They do not go to the location where you file the returns. That is all in the instructions that begin in your materials right after the form itself on 47. It tells you where to file, when to file, the whole thing, and that goes all the way through to page 52 in your materials. So it's got the instructions. It's going through a lot of the elements I just discussed, but it will go to Cincinnati. The dangers, self-prepared ones. If the client says something dumb like, yes, she knew on the application, when reality she probably didn't know, but it's just, thinking it means now that she knows, not at the time she signed it, that can have a problem. Other things that she can say, and when we went through the things that would be disqualifying, and you can lose the case just because of things the taxpayer put on it, or some practitioner who's not knowledgeable in innocent spouse procedures. So the 8857, this is just a slide for that. So, time with which the taxpayer may seek relief. Remember, that's different. That one is not the 2-year period from the time a CDP or refund offset of the taxpayer took place. It's within the statute of limitations if the liability is still owed, or within 2 years of the time paid, or 3 years of the due date of the return, whichever is later. So that means you may have a case that should have been a 6015B or a 6015F, but the deadlines are blown, but now, I'm sorry, 6015B or 6015C, but the deadlines are blown. You still have the opportunity to claim under 6015F now because of the IRS's change of heart beginning with 2011. Now, the next thing you should keep in mind, the distinction between should have known, actually knew, that gives rise to 6015C relief. And again, a divorce may be the best way that a person can get relief. It's a terrible policy within the law, but they've clearly made a decision that a divorce or legal separation or living apart for more than a year gets you relief. Now, in the case of the imprisoned embezzler, her husband got relief, even though probably as a cop he should have known, but because they'd lived apart more than a year, he was given relief. Non-electing spouse entitled to challenge grant of innocent spouse. This is a problem. When I apply on the 8857, the service center will send the other spouse a letter saying, do you agree that she should get innocent spouse? And they have a questionnaire for him. I had a situation a few years ago where I was litigating one of these. The wife was no longer married. We were doing it under 6015C. We applied for innocent spouse in our petition to tax court. The husband came back and said she knew all along. And in this case, she had been a lady who went to the clubs, did not work. She was married to a high-earning person in the Detroit area. They belonged to a yacht club. They belonged to a golf club. She went to that. And as he said during his deposition, she did lunch with the ladies, and he worked and made a lot of money. But he also lied on the return. When the IRS audited, they asserted a joint liability on the joint return. We asserted innocent spouse, said she did not know under 6015C. He responded that, yes, she did know. And so therefore, the government would not settle before litigation, would not agree to this when it went to Cincinnati, and I filed this suit. Luckily, he was a jerk. When we deposed him at sworn depositions, the government asked him how he could account for the large understatements on his return, and he made a very dumb response. He said, I consider my tax return to be an opening offer to the IRS. Well, that immediately caused the IRS to be very worried, because I would argue in court, how would you believe this guy? He just admitted he lies on every tax return he files. Why would we believe that he's telling the truth that his ex-wife knew? They quickly proposed a fairly reasonable settlement since it was a large liability and my client could afford that reasonable settlement. She paid the liability to avoid the risk of a trial. Non-electing ex-spouse may intervene in the case. Now, in that particular case, that spouse did. He first responded to Cincinnati that she should be held liable to. Then when we filed the lawsuit, he filed an appearance in the case and said she is liable. She knew all along, but eventually we did settle. Items giving rise to the division, and that looks to, hey, if you were the one that was cheating, it's going to be hard for you to argue that I shouldn't be liable under innocent spouse. 8857 and Pub 971 you should have to read on this. You should get integrated case approach, processing approach. That means they all go to the same office in Cincinnati, which gives you a better perspective. I've had a lot of good luck there. They're slower right now, just like everybody else at the IRS. They've reduced staffing. Therefore, it's taking more months to get through, but I've had some really good results in Cincinnati, not always. Beware of potential conflicts of interest. If you're representing people in an audit, like the attorney for the lawyer in Boston, once there was an assertion of fraud on those tax returns, he recognized, oh my God, the wife may have an innocent spouse defense, and she was referred to me. Why? Not because he wanted to particularly benefit me with more business. He did it so that there'd be no claim later that he had failed to protect her innocent spouse claims. And you can't come in and say, no, my client isn't liable, and then on behalf of the wife say, his statements were erroneous, and therefore I should be an innocent spouse. There's just no way to avoid conflict in that basis. So, if you don't get relief administratively, you go to tax court. And there's a case that I litigated. I have the case here. The client, on page 57 of your materials, is an actual petition for tax court. The real name of this case is Phyllis Campbell. And Phyllis Campbell was married to a commodities trader. They were still married when we sought relief. He had since fallen on some hard times. She had some assets. We asked for innocent spouse relief during the audit. I represented her, was declined. We petitioned in tax court. We had a trial. This is the petition. Interesting thing on that one is the husband was called as a witness. And I said, how much money is the most you ever made in a day? And he said under oath, well, somewhere well above $1 million, maybe at $1.5 million. I said, did you tell your wife? He said, no. I said, why? He said, because I would have had to tell her about the days I lost that much. He had purchased a tax shelter known as the London Straddle and offset a lot of money. You'll see that the tax liability on page 58 before interest for the 1983 liability. This case was filed in the 2000s, if I recall. Actually, 2004 is when it was filed in court, but we already had 19 years or so of liability and interest on that $2.8 million. The judge in that case, the case of Phyllis Campbell, which you can look up on ustaxcourt.gov, ruled in favor of Ms. Campbell because he said she proved that she did not know or have reason to know of her husband's omission of income. And among the elements used there, he gave her an allowance of about $50,000 a month to pay household expenses and other expenses, but she was not fully privy of the full amount of income he was earning. And obviously, if the liability for 1 year was $2.8 million, he was making a lot of money. Again, you have to do it within 90 days of the deficiency letter if it's an audit, or if you go in with an 8857 after collection begins, within 30 days of the time they deny it from the service center. And again, community property, when spouses live separate apart, do not share income for the entire taxable year. When one spouse is not notified of the nature and amount of the other's income, relief from the operation of community property law in certain cases analogous to 6015B, and regarding joint and several liability for still married people. And again, you can apply for that under 8857. Where the other requirements of Section 66C are not met, you can still try for equitable relief. Other resources, Pub 71, Form 8857, Request for Innocent Spouse Relief, Characteristics of Relief Provisions, Possible Prescriptions on Receiving Relief, and you should read through those. Those are all on the IRS website. With that, I've concluded the slideshow. Julie, give me any additional questions we have.
Okay. Will a divorce decree stating that the spouse is liable for the taxes allow for innocent spouse to be granted a loan, or will the other tests apply?
The other tests apply.
Okay, and then divorce decree makes husband liable for prior joint tax liability. Why would divorced ex-spouse wife still file?
Because she has to file because the IRS wasn't a party in that lawsuit. And the parties may be agreeing because it's convenient to have one of them be liable and the other not. Let's take the situation where she got divorced and she inherited $2 million from her family, and he has nothing. He's broke, and he's going to be eligible for an offer in compromise. Well, the IRS isn't going to compromise anything because they're going to come after her and collect it all. To avoid that type of agreement, she has to come in and say, I was an innocent spouse, and establish some reason under the law. Now, one factor that will give her a leg up is the fact the judge did say he had to pay the tax, but that's not sufficient to get you out because the government was not in that lawsuit regarding divorce. They didn't have a chance to put out their side. The taxpayer seeking relief must affirmatively assert innocent spouse.
Okay, and joint returns are signed, later divorced. If the husband had an OIC accepted after the divorce and the wife has been separately assessed, is it OIC or innocent spouse relief?
She can go for innocent spouse, and then you got to look at the time frames. Remember the 2 years from collection for B or C, but even if she didn't meet that 2 years from the CDP or when they offset a refund, she can still go in for innocent spouse relief if the liability is still outstanding or if it's been paid within the last 2 years. So yes, you can still go in under 6015F and try to get relief for her.
Okay, and our last question, does the 2-year time start on CDP notice or CP 504? I recently read somewhere that the time for 2 years starts when CP 504 was issued.
That is not the standard that I've read in the IRS put out in their Q&As. It's the CDP notice.
Okay, that wraps it up for our questions.
Okay, I appreciate everybody attending. Now, one other thing you should be aware of is we're in Orlando next week for ASTPS Advanced Program. If you want a trip down to Florida, it's on the 25th and 26th and 27th. I'll be lecturing on the 25th of June, and I'll be discussing the representation update. I'll discuss non-filers, and for those of you who have an ethics requirement, I'll be doing 2 hours of ethics, which will include a whole series of hypotheticals in addition to an update on recent changes to Circular 230 and recent news about the Office of Professional Responsibility. So if you still got need for some CPE, or if you want to get some good quality CPE, come on down to Orlando. I can assure you that we'll have some good classes. In addition to me speaking, you'll see L.G. Brooks, who many of you are fans of, and some of our other really great instructors from ASTPS. Julie, anything else?
I just wanted to let everybody know we will be sending an email with the slideshow that was presented for the webinar. And any questions that anybody has, you can send them to julie@astps.org, mitch@astps.org, or info@astps.org, and we'll make sure to get your answers. And please don't forget to sign up for your membership renewals that are due July 1st of the year with our new membership levels of gold, silver, bronze, and the Diamond Club. That's all.
One more comment. Remember, divorce lawyers are your friends in this case. They can send you business. You'll make money in this area of practice. Once you get into this, you've already gotten a good outline. I have a decent summary here in the law, in the materials, but you, the tax controversy people in this crowd, can make some money and can benefit people with innocent spouse claims. One other comment, I've been hired on the other side to object to innocent spouse claims by the other spouse too. So I'll work either side as long as I pay my retainer. Talk to you later. Bye.
Have a great day.